Hello, everybody, and welcome back. It is Tuesday, March 8th, 2022. I'm your host, Stephen Meade. This is our Southern California housing market update. I'm with Domicile real estate for people who love houses. Let's get started. I have something interesting to kind of talk about a little bit today. You know, I'm one of those people where I get frustrated by puzzles when I can't figure them out. So like if I don't have a plausible explanation, or if I'm on try number 5 for Wordle and I only have one try left, I tend to personally get a bit frustrated. And I have good explanations and kind of some rationale for why we're seeing a lot of the things in the market that we're seeing. But there's one statistic and metric that we're following that I find a bit puzzling, something that isn't making a whole lot of sense to me. And I've come up with a couple of plausible explanations, but I'm not really sold on any of them yet. So maybe that's something that you, the viewers out there, can help me with. I'm going to get into that this week. So stay tuned, sit back, relax, grab your favorite beverage, and let's talk about the Southern California housing market. So getting started here, let's look at our total active listings. This is a little bit more of good news. These numbers are better, right? We saw another little uptick here this week in both our under 1 million and our 1 to 2 million. Just as a reminder for everybody, we define the Southern California market as Los Angeles and Orange counties. You may have different opinions about what the Southern California market is, and that's totally fine. But for our purposes of producing statistics, that is what we are basing our statistics on. So if you look here, overall, our inventory levels are still down a bit versus last year. But whereas last year, inventory got worse and then slowly started to get better through April, May, June, and July, peaking here around the beginning of August, ours kind of dropped. And then the beginning of the year, it's been on a steady incline. And that's true for both under $1 million and our $1 to $2 million categories. Even though that total amount of inventory is still less than last year, it is moving in the right direction. So if you're a home buyer, yay, that's good news. If you're a seller, that does mean that your market position might be weakening a little bit, but you are still better off than you were last year in terms of what you are competing against. Moving on to our new listings. So this is kind of an interesting one for me because in this entry level category, we kind of went up and then we've kind of going up more slowly. We're still well below where we were last year. Our 1 to 2 million category, we are up a little bit higher. Now, one of the things that I do want to caution you a little bit is in terms of comparing year over year on these numbers. Obviously, what happens as prices go up, right? When prices on homes go up, it means there are fewer under $1 million houses available. So do be aware there might be not bias in these numbers, but do be aware that that might be a little bit of an effect and why it looks like we're seeing so many more new listings in this 1 to 2 million, but we were underperforming last year and under 1 million. I think the shape of these charts is maybe a little bit more important and relative to where we were, between the start of this year. I think looking back to last year is maybe not necessarily the best methodology. So if we look at our new escrows, again, looking back to last year for that same reason, that might explain why this is a little bit less. But if you look here at where we are seeing that upward trend on new escrows too. So we're seeing this little bit of parity. One of the things that I talk about a lot on here is this notion of the balance between supply and demand. So it's not always how many houses you have for sale, but it's that reconciliation between both of those things, right? In that relationship. Meaning, even if the number of new homes that came on the market skyrocketed, but the number of new escrows skyrocketed too, that's not really a change in that supply and demand balance. And that implies that our market is, undersupplied. I still think to a large degree that's true. The stories you're hearing, we are hearing about some houses sitting longer, but what I think that means is that people are not interested in those houses, but the desirable homes are not sitting. We're going to see here in a second, they're actually going very quickly. So when we reconcile that supply and demand, we get kind of an absorption rate that just looks kind of at what's coming in the market and what's going out of the market in escrow. We're still close to 90% under 1 million. that is still a very, very slanted seller's market. We're just below 80% here in our $1 to $2 million category. Again, that is still very much a seller's market, not as strong as our under 1 million. But you're going to notice, especially as these more expensive homes, that there's a much bigger variance between the most desirable and the least desirable homes in that category. Now, if we look at our prices, right, I think this is a big one for me. And one of the reasons why I think that this is a really big one for me is this is kind of putting a graph to something that we've known probably for a month or two now, right? And that is that since the beginning of the year, we've really seen a big uptick in prices. Look at where we were on February 1st. Now, mind you, this data is delayed by 4 to 6 weeks. So in our 75th percentile or upper quarter of the market, look at where we were February 1st, look at where we are now. That is a very significant jump in prices. If you look here at our median, look at where we were, look at where we are, and draw that trend line. This is a fairly strong slope in prices. Really, that's driven by a complete lack of inventory. Even here at our entry level, where it's a little less pronounced, we still see a very noticeable uptick in pricing over just a 1 month period. This is not unusual to the Southern California market. A lot of times we assume that things are going to go like this, right? That if we have a 6% year of price growth, we see 5% every single month, right? And it goes up like that. That's not how it works. It goes in fits and starts, and very frequently, the beginning part of this year, that February, March, April timeframe is when a lot of our gains tend to happen in the Southern California market. So before you read an article that says based on the month of February, annualized gains will be like 36% or something like that, understand that our market, our gains are not, this is a concentration point typically for gains in the spring for home price gains. We usually don't see that pace all year long. So kind of jumping back in here, this is really telling us what I think a lot of us have been feeling in the marketplace. Now we actually have the data to back it up that is in fact what has been happening. If we look at kind of a little bit of our quick and dirty, this is our second method of calculating sort of market competitiveness. You see that our 1 to 2 million is about the same level of competitiveness as it was, maybe a little bit less, but that under 1 million, that level of competition has dropped a bit. Remember, as these numbers go higher, that means more of the homes that came on the market in the last 2 weeks are still available. And I think one of the reasons we might be seeing is in this lower price range, those lower price ranges tend to be a little bit more elastic to interest rates and pricing, meaning that payment makes an even bigger difference for those buyers at that entry level end of the market. They are more influenced by interest rates and prevalent prices. Here we go. Now we're going to talk about what is sort of keeping me up at night and what I find puzzling. This is our closed to list ratio. So what this is looking at is we are saying how much over our homes selling versus their list prices. And if we look at this here, we've really reached a new height for our under 1 million category. Those homes are going, gosh, over 104% of list price, and our 1 to 2 million is actually off our chart. It is on average. That means on average we are over 5 or 6% above list price. Personally, here we have a listing that went, double digits over its list price, and I don't think we mispriced that. So, what is this telling us about the market? I think I'm going to go off screen share here because I'm going to go on a little bit of a tangent, but I think it's important. So one of the things that I try to distinguish with and between it and maybe draw a little bit of a line are what I call sort of mathematical market movements, right? These are quantitative in nature, and psychological market movements. These are based on game theory, how human beings choose things, how they buy things. And I think what we're seeing is a fairly significant psychological effect. So there's a couple of components that I think might be going on here. Something that I've touched upon, let me go back and bring that chart back up. Something that I've touched upon on multiple occasions here is that this is really sort of a seller's expectations versus buyer's expectation graph. And one of the things that I think might be happening here a little bit is that we may be getting just accustomed where both sellers and buyers feel like going way over list price is the normal. And they sort of price on the more conservative side because they want to see those multiple bids. They want those homes to go significantly above list price. It's a fun, exciting time to be a seller. And I think buyers are coming in with this expectation. They're looking at these charts too, hopefully, if they have a great agent. If you have an agent who is not talking about these things, perhaps you'd like to consider making a change. When you have buyers coming in to bid on a house, just assuming it will go significantly over list price. So that's one element. I'm not entirely sold that that really explains this because our market fundamentals say we should be hovering over list price. But I would think at this point that, sellers would just be saying, my house is going to get shown no matter what. I'm just going to do a big list price, but they aren't. So that's one element. The other element that I think I'm seeing is that this really is a sign of buyer fatigue. I think this process that we are going through right now for buyers is so unpleasant that they will gladly overpay for the house to be over and done with it because they don't want to be a buyer in this market anymore. They want their deal secured and they don't want to spend any more time on this. Again, I'm not entirely sold that in mass people have suddenly said, let me just pay an extra $50,000 versus today's prices just to get something. But I do think buyer fatigue is real and an element in this market, and it is affecting behavior. So I'm not entirely sure why we are seeing these persistent close to list ratios. To me, this is a puzzle. I don't think I've really kind of figured out a theory that I think kind of explains all of it yet. So that's something we're working on. If you have ideas on this, we would love to hear them. I am curious. I'll try to be nice. I'll try to not shoot your idea down. I don't think it's viable or a tenable or plausible idea. But yeah, put them in the comments. Let's kind of see what your thoughts on why we're seeing these persistent close to list ratios. Because to be honest, given this absorption rate, we should see seeing rising prices, not like this. And you'd think sellers would get a clue by now and would just raise their list prices, which they are. And we're still seeing closing significantly above list. Days on market for new contracts. We are hitting the lows here. How much lower can this go? I don't know. I think there's actually a structural limit to how small this number can be. What's fascinating to me is that look at what's happened as we've seen that 1 to 2 million is under 20 days. That's pretty crazy to see that persistently in this market. And then finally, we have our affordability chart, right? Affordability is one of my favorite things to look at. You see all through the beginning part, we kind of jumped up, then we hovered through the summer. Then as rates went up, we see affordability. The payment is getting more expensive. But given where inflation is, like I said, at 130%, I'm still not sure that that is a crazy number versus 2018, given where overall price inflation is in our marketplace. Finally, we have our prevailing mortgage rates. And I see we are missing kind of the last little parts here. I'll have to fix that in the graph, so I apologize. But we are generally in this 4% vicinity. I am very curious to see what is going to happen in the next few weeks. Obviously, the situation in Ukraine is having an effect. We've had some big stock market sell-offs. Usually that is good for the bond market, which lowers interest rates. So really, we're just going to have to sit back and take a look at that. Again, I kind of apologize on that one. I didn't catch that before posting. We will have that updated for you next week. In fact, if you follow us on Instagram, we might just post up the actual chart with some commentary. Obviously, questions, comments, we love them. If you were looking to buy or sell real estate or know someone is in Southern California and you would like our expertise, we are happy to provide that. Simply reach out to us in the comments here or send us a message on YouTube. We are happy to take a look at that and work with you. Don't forget to like, subscribe, and hit that notification bell. Thanks so much for watching, everybody. We've got some links down below. Obviously, our app for finding houses. no ads. We don't sell your data to a third party. It's an easy to use app. If you can use Redfin or Zillow's app, you will love our app as well. It basically works exactly the same way, except we don't sell your data out the back end and we don't display ads. Trying to think if there's anything else. Stay tuned on Thursday. We do our architectural email and our video. And then Friday, we do our entry-level first-time homebuyer specific market update for Southern California as well. Thanks so much for watching, everybody. We'll see you again real soon.